Hi, this is Chris Cook with the Budget Guide, and today on Money Strategy, we're going to talk about 5 different investing strategies you can use today. Okay, so the first one I'm going to talk about is retirement up here, and what I mean by that is very safe investments, ones that you have impeccable confidence that you're going to get your money back and some with it. Most commonly used ones are bonds, and then maybe some very stable dividend stocks, blue chip ones that you're gonna know that are gonna be there for the long haul. Just remember, this money you have in this area, for the safe area, you do not want to lose. Okay, so next I got up here is the market. Generally, in the long run, this is really reliable to go with because you're going to be tracking an index that has the top companies in the US or another area of the world, depending on what you pick. The S&P 500 is the 500 largest companies in the US. The NASDAQ 100 is the 100 largest companies on the NASDAQ exchange, excluding financial services. Usually these are the tech companies. And it's a lot easier than trying to pick the companies you think is going to outperform the market. So if you want a pretty reliable long-term return, go with the market. Okay, so now we're going to get into some of the more aggressive investing strategies. And with innovative here, that's the one we're going to start off with. That's my word for large growth. So these are big companies that are not going anywhere anytime soon. They like to innovate on their existing business. Sometimes they go off and try to create more businesses, but you'll see that they do better when they add on to their existing business and grow. These companies are blue chip, large growth, whatever you want to call them. They're very good companies and reliable, and they're not going to be going anywhere for a long time. Some examples of these companies could be Google, Apple, Amazon, those types of companies you think of that are big names that are going to be strong for a long time. All right, so the next one I'm going to talk about is value investing. That's when the company's value got brought down recently and you believe it's going to go back up, whether that's because of the news and people freaked out and started selling the company, or if the company for whatever reason is down here and you look at the numbers and you believe it's going to be up here, and it could be a few months or a year, but once the company gets back to that value, you'll make your money there. A good example right now possibly could be Facebook because of their data misuse and everyone freaking out about that, and it's a serious subject, but let's say they fix it and in the public's eye they see that and they're like, okay, yeah, this Facebook's a good company, and they bring the value back up. Well, that could be something there. The best investor in this and the most successful one has been Warren Buffett, so I suggest you look into him and his strategy and how he's done this, and so you could try to do what he has done in today's day and age. All right, so lastly, we got Disruptive, and that's my favorite investing strategy just because it's really fun for me, really. But what that is and what that means is that there's a newer company with a business model that's newer that is competing against older company in the same industry, but this newer company has the advantage because the older companies have to actually sacrifice their profits that they've been making years and years and years to be able to compete with them. Bigger companies, older companies are less willing to do that, and that's why the disruptive companies are able to grow without that much competition from the big guys. I mean, sometimes they come in and they can compete, or they could buy the newer company, but usually even when they buy the newer disruptive company, they don't even do that much with it, and another competitor comes up with that new business model and competes and beats out the older, bigger companies. I'll just give you an example with Google. Google may be not as disruptive now, but back when they started, they were very disruptive because what they did was they got information for users and threw some advertisements in there. So just go back 20 years ago and try to think, how did people get information? Usually that was news stations and newspapers, really. If you were going on a newspaper and trying to buy and actually paying for a newspaper versus not having to pay for the internet and having to be able to search whatever you wanted whenever you wanted, that beats trying to get little tidbits of information here and there, trying to read through a newspaper. And so that's how Google disrupted newspapers many years ago. Alright guys, I just want to echo that these bottom three here are aggressive strategies and sometimes can be tricky to spot those companies and be successful investing that. Just remember my disclaimer in the description. Other than that, just let me know some more investing strategies I can go over, and I'll see you next week.